Optional use of a trend line on the AD indicator works fairly well here since it's for a short duration and on a steep angle. The gap up isn't so important in this case, but rather the period of indecision that immediately follows it. Not surprisingly, we see familiar characteristics which include higher volume and noticeable divergence between the AD indicator and price movement. When there is eventually a successful reversal, we see a case where there is no reversal following a major divergence of the AD indicator and price. It highlights the importance for looking at further confirmation of a reversal and reminding us that a divergence doesn't always guarantee an immediate reversal. A familiar scene here, price gaps down to close lower, but there's divergence with the AD indicator moving higher. This is because it's a gap down and there's a large green candle. A good example here where a trend line isn't so practical to apply on the AD indicator. In contrast, here's a good example where a trend line and support area help identify the bearish continuation to this trend, which actually is weak, as seen by the relatively flat movement after the initial break below the line and increasingly bullish movement with the AD indicator and price. With sustained divergence after the sharp peak, the second lower trend line on the price chart becomes more relevant. Overall, these circumstances point to a weak to moderate downtrend. Later, when the trend line on the AD indicator is contacted and eventually broken through, there's no immediate follow-through with both price and the AD indicator dropping. Instead, they both move neutral to bearish, showing further weakness of the bearish movements during this time period. Overall, sustained divergence of the AD indicator and price after some sharp peaks summarizes the period of a weak downtrend, which can now be more easily seen with the period of low volume and weaker bearish price action.